Nick O'Grady, CEO of Northern Oil and Gas, joining us now. Thanks for joining us, Nick.
Thanks for having me.
Absolutely. Tough times we're in. We really appreciate you joining us right now. If you can, let's just go straight into talking about the oil price, really the shock. How has it affected business in the Bakken right now?
Well, it's affected it twofold. One, the forward price of oil is below economic threshold, so virtually no new well proposals will make an economic return. And so for activity in the basin, it's going to slow down. In the immediate term, the double whammy, I would say, is that what we have never seen, certainly in my lifetime, is such a downward shock to demand. In the financial crisis, oil demand went down a little bit over 1 million barrels a day. There are estimates upwards of 20 million barrels a day. That's manifesting itself not just in the Bakken, but in all U.S. basins where you're seeing local prices, forgetting Cushing for a second, starting to blow out. And so we've seen prices in the Bakken as low as $8 a barrel. That's a function that there's literally no physical place to put those barrels. And so I'd fully expect in the coming months, unless something materially changes, to see either forced shut-ins of production, force majeures by midstream operators who can't place the barrels they even have firm transportation for, or ultimately some sort of regulatory intervention that forces the hand of operators to make them do so.
Can you tell us how this is different really from past downturns or shifts? Everything seems different in a lot of different ways, but particularly with industry as well.
Yeah, I think the industry has already been suffering over the last few years. Capital has been pulled out of the space, particularly for public companies. The availability of debt and equity financing has diminished. There have been very few public offerings. And so even when oil prices were relatively healthy at $50 to $60, there was already some signs of stress in the basin for past sins, so to speak. I think what's different about this one is I don't think anyone in the last 80 years, in the history of oil, I believe demand on an annual basis has only gone down 2 or 3 times, 1980, 2009, and I believe one other period in the 70s. The point of that, though, is just a simple fact, which is that the industry is facing an existential crisis. I think that market forces will be at work, and I think I do believe at some point this year people will go back to work, demand will return. But instead, what's been put in motion already is that what was already a tight capital situation is going to accelerate, especially for producers who didn't prepare either their balance sheets or their businesses for flexibility in environments like this.
Really, can you talk to us also, Nick, about really what the plan is to move forward? Can this be used to a company advantage? That almost feels a little hard to ask, but if you can expand on that as well.
Yeah, so as it pertains to our company, we are a bit unique. We have upwards of 80% of our volumes already sold for the next 2 years. And so it doesn't mean that we're immune to it. It doesn't mean we won't feel the impacts in the physical market, and it's certainly going to impact volumes that would have otherwise been produced between now and next year. And think of shale oil or oil production in general. It's a very unique commodity in that oil production declines naturally unless it's reinvested in. And so even if production and drilling stops for as little as 3 months, the base production that you're starting from is going to be a lot lower, as will the cash flow that they produce. For us, we've already seen one of our large operators, Whiting Petroleum, file for bankruptcy. I expect to see more. I don't think that's any surprise to anybody. And I'd say that we believe it's one of the best capitalized companies in the space that will be able to take advantage of it. I think it's going to take some time. But as banks grapple with being handed the keys to assets over the next few months, I would expect there are a lot of assets that are going to shake loose and at very attractive prices. And so while it might not make an economic return to drill a new well, there's certainly a price you can back into that will earn a return on existing production or proved developed producing production. And I expect those to happen. I don't think banks naturally want to own oil and gas assets. And so therefore, I think that's coming. And for some companies, whether it be their debt trading at distressed levels, they may be able to sell assets at otherwise distressed prices and be able to do some good with it. And we certainly as a company hope to capitalize on that.
I hope that you are able to do that. You've touched on it, of course, looking at the future of the Bakken, but is there anything else you can expand on? What do we know? What can we assume? Anything else you have to provide there?
Yeah, I mean, I think, look, we're in the middle of a storm here from a demand perspective. I think that the forward strip reflects that, but I think the forward strip also, is not always an accurate predictor of what's going to happen to oil. I think U.S. oil at a minimum needs $40 in order to have reinvestment, and that's there's maybe a couple dollar difference between the best of the best in the Permian or the best of the best in the Bakken or other places, but that's the reality. And really, to make a healthy return, it needs $50 plus. There's an old trader adage that the market can remain irrational longer than you can remain solvent. And so I think that that's the period that we're going to enter into over the next 6 to 9 months. But as I pointed out before, I think that with production going to decline heavily, I do believe we will all leave our houses at some point. And when that happens, I would expect the forward price of oil to react to that. I think the Saudi and Russian strategy was a sound decision at the time, which was that you have the highest cost producer in the world, being the U.S., growing at 2 or 3 times the demand of world demand growth. And I think why should the lower cost producers be cutting to make room for that over time? And so this will instill discipline in the U.S. I think that some of that was already coming. I don't believe, though, that either OPEC or the Russians, for that matter, really factored in the COVID-19 impact to that. And so therefore, I do think there's going to be a reaction, like I mentioned before, in the physical markets in the U.S. that's already going to be, the hands are going to be forced. So what I do think is that for those who can make it to the other side of this, I think you're going to have much healthier oil prices on the end. I think the other thing, too, is that people have been drilling too fast. And so it will extend the life of these basins. The Bakken's in about the middle of its life cycle. The Permian's probably a third of the way through its life cycle. And so therefore, instead of drilling faster and burning through that, I think it will extend the life. But I do think it will start from a much smaller base. So if the U.S. was producing about 13 million barrels a day before this, I think you're going to lose several million barrels a day over the next 9 months. That's sheer momentum. Even if prices rally somewhat in the front, it's not going to make a huge impact. And then I think, sometime in 2021, maybe as late as 2022, but I'm optimistic, you're going to see prices get to a point because you're going to need to replace some of those barrels. We do need this. And I just say, I'm a free market person. I generally don't believe in bailouts. But I do think there's a geopolitical thing that is not always fully understood, which is that one of the greatest advantages in my lifetime has been the growth of U.S. production and the reduction in imported oil. Some people, talk about energy independence. We're not there. We produce 13. We consume about 20. Obviously, we export products and light oil and import heavy oil. Mm-hmm. But the bottom line is, from a trade deficit or anything you want to say, 1 million plus jobs in the U.S., producing it here on our own soil is a really important strategic advantage. It's what got the United States through World War II, frankly, was the ability to be self-sustaining. And so no different than we subsidize our farmers to make sure we can produce enough food for ourselves, whether it costs a little bit more for people. I do think that people need to keep in mind that letting the industry die like it once did in the late 1980s is a pretty big disadvantage, because by the 1990s, we were importing 70+% of our oil. And I don't think that's necessarily a good political decision.
And Nick, with that, with trying to survive, what is Northern Oil and Gas's position, or really a plan to attack the new oil price environment? If you can expand more on that, hunkering down and attacking it.
Yeah, so we have a group of very supportive stakeholders. We have done a lot of moves to our balance sheet to prepare for this. So as I mentioned, we've sold a good portion of our oil for the next 2 years, so we're relatively well insulated. But I do think in general, as activity declines, overall production will decline. We're a non-operator, so we're a passive owner of these assets, and operators are reacting in real time. Mm-hmm. What I would say is capital is extremely scarce, and we believe we have more access to it than most. And so I think we're going to be able to acquire assets through this downturn. I think that for capital calls on assets, meaning that wells that are being drilled and potentially ducking meaning drilled but uncompleted, not fracked, that capital is so precious to some people that we're seeing those being sold at sort of fire sale prices. And so I do think we're going to be able to acquire assets, and we'll be able to come out of this a lot stronger.
Well, Nick, we really appreciate you taking the time to speak with us, and please stay safe and well, you and your family, during this time.
Same to you.
Thank
Have
you
a great
very
day.
much. Thank you, you too.
For more Hart Energy videos, follow our social media channels.